Welcome back to my another video, and in this video I'll be focusing on precisely mechanics for you to prepare consolidation. As you can see that in the previous video we covered what is the pro forma, the standard pro forma that you would be following. In this video we will be looking at how you can start recording your transactions. So I will be taking you through a step-by-step workings that we will be looking at. Make sure you learn them and you write them in the same order, because then it becomes very easy for you to remember and recall, and then you can follow these steps that I will be using now. So here you can see that the standard workings that we will be looking at for preparing the consolidation. So there are 5 standard workings that we will be following up, and this is how it's good if you can remember and note it down like that. So it becomes very easy for you to tackle these in later when we are solving the problems. So the very first working that you have is your group structure here. And you can see that in your group structure, there is nothing else, but we are just looking at what is the group structure and how we can note it down. So you can see here that parent, acquired subsidiary, and that basically forms a part of the group. So here you can see that parent is acquiring subsidiary and P's percentage is written here and NCA. So let's say if it's 80% acquired, so the remaining 20% will be coming up on this side. And then you can also mention the date of acquisition. So that is the very first step for you to note it down so that you're very clear that what is being recorded and how. Here you can see that key issues is given to you, parents percentage ownership of subsidiary at the date of acquisition. So you need to know that exactly what is the percentage that has been acquired at the date of acquisition. We'll move on to the working two now. Now working two is where you will deal with the net assets of subsidiary. Here you can see that we're looking at net assets of subsidiary. So these are at 2 dates. You can see that these are basically, here you can see that this is at acquisition date, and then this one is at reporting date. So make sure that when you are recording subsidiaries net asset, you know that there are 2 columns, and you can see the first column is basically taking the details at acquisition date, and the second one is taking the details at reporting date. Now you can see that line by line, you have to search this information in the case study that has been given to you. So here you can see that your share premium is here. So share capital. So you can see that you start off with your share capital, right? And then you've got your share premium. So you start taking off this information at 2 dates. So you will look at the 2 dates, and if there's any expansion or reduction, you record it accordingly. If there's any surplus, you go on and start noting down surplus, retained earnings, fair value adjustments, and then provision for unrealized profits. So here you can see that basically how you are going to record this information, and more on this I will be discussing when we are looking at the proper case study, and then I'll show you exactly how you can do the workings here. At the end, you can see you have got 2 values, which is at acquisition date is here, and then you got your at reporting date at here. So next thing is that you need to look at what's the difference between these 2 values, because that is known as your post acquisition reserve. So that difference between these 2 values is known as your post acquisition reserve. Okay. As you can see that most of this information that you are looking at, you will be receiving it from subsidiary statement of financial position here. Okay, and then you can see there will be some information in notes to the question as well. So when you're looking at the case study, there will be some information presented there as well. And then there will also be, for some more calculation that you can do as part of your working. So that basically is end of your working two, which is net assets subsidiary. Next in line, we have got a goodwill. Now, goodwill is calculated using this pro forma. So as I told you in this video, I'll be just discussing the mechanics. So I will not go into more detail what is goodwill and how you can, why do you need to calculate goodwill. So it's more based on how to calculate goodwill. So goodwill is your working three, a standard third working, where you will start with the fair value of consideration paid. So how much money you have paid, right? That will be your starting point. Now you might have payments in 2 stages. You might do some cash payments and then some share issued. So both you need to consider. There might be coming up contingent liabilities as well, which will come as a third source. So, but we will be looking at that later. It's more advanced things. But for the basic, you can see you can pay in terms of cash and also in terms of share issued. This information will usually be provided in the question. and then you subtract your fair value of NCI at acquisition. So this is the information will usually be given to you in the notes to the case study. So from there, you need to pick that up and look at the fair value, and then fair value of net assets acquired. So this is the fair value which you must have calculated from your working two. So this is the information which is from your working two. We'll be moving on towards your working three here. That's the fair value of your net assets acquired. So that's how you will be calculating your goodwill working three. I'll move on towards the working four. Working four is basically it's focusing on non-controlling interest at reporting date. So here you can see that how will you calculate at reporting date? So you can see fair value of NCI coming up here as this. So this is the value you have received from working three. Remember, we already have seen this in notes as well. I can just show you quickly. So that's the one. You got it from the notes, and then you have to put the same value again here. And then also you need to see NCI share of post-acquisition reserve. Now you can see clearly this is coming from working two. So if I go back, I can show you in your working two, this two differences was your post-acquisition reserve. So that difference is basically being written here. Is that okay? So don't worry when I'm doing later a question. So I'll follow again the same format, and slow by slow, we're going to look at the case studies. So then you get your NCI, which is your non-controlling interest at reporting date. And here we go. This is the last working that you need to know and note it down. So last working is about your retained earning. So we will be looking at what is the parent's reserves or group's reserve at this date. So first of all, parent retained earning, this you will get from parent's statement of financial position. So it will be from SOFP. And then you got your subsidiary, and then finally you have to subtract any provision for unrealized profits that is being sold by parent. So if the parent is selling any goods, remember that if parent is selling any goods, that will be subtracted in working five, and if subsidiary is selling any goods, so that will be subtracted in your working two, right? So that's your working two. Okay, so that's all your workings here. You can see that I've gone through all the five workings. That is very key for you to know the mechanics of consolidation. So just a quick overview of the workings before we finish this video. So the first one is your group structure, right? So in group structure, you clearly write parent, acquired, subsidiary, right? Group working two will be your net assets of subsidiary. So here on my screen, you can see this is how you will be recording it, okay? So more on this, I'll be discussing with you in next video. Working three is your goodwill, right? And then got working four. So working four is where you will record the non-controlling interest, and the methods is written on the screen. So keep in mind, this is very basic and straightforward for us, to just get started. And then we got working five, which is where we will be discussing about parents retained earning. So that's all for the day. I hope you enjoyed the video. I'll see you in the next video. Thank you.